All right, well, I'm going to give you guys a little recap of where I'm at on the day. So today's a no trade day. I just didn't see anything that looked that great. I actually already logged out of my platform, but I'll log back in just so you can see. So no trade day for me today. Uh, when I sat down early enough and just saw a couple of reverse split stocks, THMO. This one did give some opportunities. I did not trade it. If we look at on the 1 minute, there was a halt at the open. It halted up at 451, and then it resumed from that halt, and it actually did like a brief dip right here, and then halted up a second time at like 491. And that second halt, there was definitely a dip trade there. The volume was light. I wasn't really sure about it, so I didn't take that trade. And then I did not take the trade on resumption from the second halt because I thought that was too risky. It sells off, it comes back up, sells off, and then right here it broke back over 5. That could have been a decent trade. Went up to a high of about 555, and then reversed and halted down at 472. So short-lived strength. So, and now that 5-minute candle is so ugly with a shooting star, high red volume. So that one's no good for me. And so no trades on it. Although there were a couple opportunities, I didn't take the trade. OP ended up pulling back. ORIC, this one, I squeezed up a little bit. It was something I was kind of watching as a maybe over the pre-market high, which was around 460, but I just wasn't really sure about it. The float's a little bit higher at 27 million shares. Kind of a continuation stock after you could sort of see this setup here. So I left it alone. I just wasn't really sure. So that was ORIC. Let's see. ISO, no trades on that. Too cheap. YGMZ. This one I almost took a trade on. And again, short-lived momentum. So on this one, we had a squeeze up into a halt at the open. It pulls back, it pops back up, and right in here, let's see. Yeah, I was right in this area I was watching. So it's consolidating here. It pulled back to a low of 539, and I almost punched it at about 545. And my starter's 3,000 shares, and I was like, okay, I could punch that for 3,000 and be in with 6,000. And the spread just for a second opened up to, I don't know, maybe 8 cents. And I just sort of thought twice of it. I thought, I don't know, not sure about this one. And then it halts up, opens at 6, dips and squeezes up to 640. Thought about the dip and rip, but the spreads were pretty big, and I just said, nope, not doing it. And then it halted down, and now it's halted down again. So short-lived moves today. Nothing has really held up super well in small caps, at least so far. And, my sweet spot in terms of time of day is between 8 and 10. So if I haven't taken any trades by 10 a.m., then as a further step of risk management, I can say, you know what, I don't think I'm going to take any trades today. So that was the decision. My metrics right now, I've been in this kind of like slump here the last, like 2 months. I had a really nice hot streak, and then I had like 4 or 5 red days that were a little bit bigger at the end of October, a couple red days in November, nothing crazy, but a couple red days. And so you can see my equity curve is kind of flattened out after the strong summer, like 367,000, kind of like flattened out here. Look at the 30-day. You can see it's progress, but it's just slow. And so in fact, November was the worst month I'd had in 2 years. I made less than $10,000. It was a very slow month for me, but it was still a green month. And December isn't really that much better. So we're just, at least for small cap trading, it feels like we're in a little bit of a slump. And one of the things that I've said, because, of course I've been trading for such a long time, is we always have these ebb and flow. We have hot streaks and we have cold streaks. We have hot streaks and we have cold streaks. And, we're obviously we're not the market maker. We're not the broker dealer that just prints money every single day. For us, we need that volatility and we need liquidity. And that combination of volatility, liquidity, and some degree of predictability is just what we have not had as much of, at least as far as I've been able to tell, in the last like 6-8 weeks. Again, with a couple of exceptions, we've had a couple stocks that have made some nice moves, but because I've been sort of in this mode of feeling like I'm in a little bit of a slump, it becomes a bit self-fulfilling because then you trade more conservatively. And then when something does work, you kind of miss it. At the same time, my job is to manage risk, right? I'm in charge of a fair amount of capital. That's my account. And my job each day when I'm trading it is to manage my risk, to try to take risk that has a good opportunity for giving me reward, right? And have a good return on that risk. And if I don't see it, I just have to be more conservative. And so I am doing that. And all in all, I'm okay with grinding on smaller numbers. I feel a little burnt out because I know that in one day, well, first of all, this is $30,000 in profit over the course of like 7 weeks or 6 weeks. That's less than I've made in one morning in a hot market. So I feel like I'm making very slow progress, which can make me feel a little bit burnt out. And I know that in one day I could lose 8 or 10,000 if I got a little too aggressive on the wrong stock, right? A little too aggressive on a position on THMO, long for the break of 5, adding at 550, and all of a sudden caught in a halt down 75 cents a share, 50 cents a share. With 15,000 shares, if I stepped up to the plate, that could be a big loss. Same thing with YGMZ. YGMZ, a trade on this one, come on, that went the wrong way, that I didn't cut my loss on. Come on, look at this. Halted down a second time. This is nuts. Look at this chart. That's terrible. So every time I see that, it reaffirms why I'm sitting on the sidelines, why I'm being cautious, and that's gonna be my job. I was talking yesterday a little bit about when I first started trading, how I kind of approached trading, thinking a lot about my friend who had made money trading penny stocks, and of course, trading penny stocks, as I know now, is incredibly risky. But, I had this friend in high school who made about $16,000 trading a penny stock. And I don't know how much money he put into it. Probably a couple $1,000s. So it was probably like some big 400 or 500% type of return. And so when I was in my 20s and I inherited $100,000 from my dad, after he had passed away, and when my younger sister turned 21, we both got that money. So I was 24. At that time, I sort of thought, okay, well, can I actively trade this, and can I make enough money actively trading it for it to be my full-time job, managing this capital? And naturally, if I'd invested the whole $100,000 in, Procter & Gamble or Coca-Cola at 2.5% interest, the dividends, $2,500 a year wouldn't have been enough to live off of. So I had to start to increase my risk tolerance in order to get a bigger return. And, you could look at junk bonds that yield 10, 12%. Well, that still wasn't enough. I knew that I kind of needed to make 25, 30, maybe $50,000 a year. Probably not 50, but, 50 would have been certainly nice at that time. But 25, 30,000 a year was fine. So, 500 to 1,000 a week, roughly. Well, geez, that meant I needed to grow my account by 30 to 40, 50% a year. And so I started just basically increasing my risk tolerance to where in the market I could find that kind of return. And with my friend who had made $16,000 trading penny stocks, there was a part of me that thought, geez, I'd only have to do that 3 times a year. If I did that 3 times a year, I would hit my goal. And so I think it's worth keeping that perspective that you do not have to trade every single day. Now, most of us will because we see opportunities or because we just like trading. But in fact, in some markets, it really is better to sit a bit more on the sidelines and keep in mind that all it takes is, really probably a couple of good trades a month. A couple of good trades a month where you execute them well and where you step up a little bit could be more than enough. But, a lot of traders get into this habit of over trading, digging themselves a hole, incurring unnecessary losses, and then you get into this that's nasty false breakout there too. You get into this kind of nasty cycle of just almost you're trading just to cover your losses, and that can be a really bad habit. So I'm sitting here trading a lot less than I'd like to, but looking for opportunities, trying to be disciplined, and finding enough opportunities to be making a little bit of money. All right, so $500, $1,000 a day. So yesterday I was up 1,800. Day before was 1,200. Day before was 500. That day I went red before finishing green, so I was happy just to be green. 2,500, 600, 2,000. Yeah, these are really small green days for me, but relative to trading with smaller share size, I think this is the right approach because all of these small trades will add up, over the course of days and weeks and months. And then if I'm managing my risk and we, a couple times a month end up getting a really nice day where I can be up 4,800 or, 10,000 or something like that, then those are going to help kind of fill the gap. In fact, I had one year where I can't remember when it was, but I had one year where I think 2 or 3 days accounted for like 30% of my profit for the whole year. So, it just kind of, it goes to show why it's important to show up every day, because you never know what's gonna happen. And what if you had those 3 days in December at the end of the year? You could have spent like the whole basically year thinking you're behind goal, not going to hit it. And then the last 3 days, it's like it doesn't, you end up having a hot streak and we have some great momentum. And in 3 days, you add a huge amount to where you're at on the year. It can happen. So I try not to get too bent out of shape when I go through the downs. And when I'm on the ups, I always try to remember that these are temporary. There will be another slow period in the future. And during that slow period, I want to remind myself that trading in a cold market can feel exhausting and a grind, and that there will be another hot market around the corner. Whether it's a week from now, 2 weeks from now, a month from now, we don't know. But you want to try to keep yourself in the game as long as you can. Keep gaining experience, keep practicing, and give yourself the ability to, to be able to capitalize when things do pick up. I think that traders that become too aggressive and then end up just spiraling, well, then they can end up missing the next hot streak, right? So that's not worth it. So I'm here in the trenches with you guys every day, trading small size right now, being conservative. I did have a bigger loss in October of 8,000, and that was probably the biggest loss I'd had in a long time. So, we can look at where I sit on the year. Let's see. This is going to show. Let's see. Let's look at detailed. So on the year right now, I'm sitting at 983,000 in gross profit. That's gross profit before fees and commissions. Unfortunately, my fees and commissions are substantial this year, and I'm sitting at 800,000 after fees and commissions. So, it's something that I'm thinking about for next year, in terms of brokers, and should I just, switch to use my TD Ameritrade account more? I'm not really sure, but in any case, if we look at my win-loss expectation, you could see that I've had a couple periods this year where I've gone things have been sort of slow. I'll just zoom in on this for a second. This year's, it's not been what I thought it might be. I don't know why this is like, there we go. So I had a period, started the year strong and then gave back profit. This was sort of I was still in the roller coaster right here. I still thought I was going to have like a fantastic year like 2021, and I was trading really aggressively. And then I kind of started to hunker down and get a little bit more conservative. And things were pretty slow through like May and June, which is kind of the same as it is now. I was just like, you know what? Just keep your head down, small gains. That's fine. And then we ended up having a terrific month of August right here. Great month of August, great month of September. And then things cooled off a little bit here in October, and I'm kind of back to the same spot I was here. So sort of stair stepping up, but trying to do everything I can not to have big drawdowns. So my biggest drawdown this year was in January of 105,000. That's a substantial drawdown. And one of the things that I set my intention for was to reduce those drawdowns. So the next biggest one was about 50,000, then 38,000, then 21, 16, 3,000, 1,400, 2,000. A little bit of a bigger one here in October, down about 19,000. And then, recoup that. Took more time to recoup that loss, as you can see here. It was sort of a stair stepping back up. But, recouped it and now back basically at all-time highs in my account. So, just to give you a little bit of perspective, this year has certainly fallen short of the goals that I set for myself. But I don't want to lose sight of the fact that certainly one or two good days, even if I had them next week, could change this pretty substantially. And also, there's just a degree of I can only do as well as I can do. I mean, if there's a lack of volatility or liquidity or predictability, then I'm going to make a little bit less. And maybe next year will be worse. Or maybe next year will be better. But in any case, I'm far exceeding the expectations I set for myself when I first came into the market to start trading, but far exceeding them. And as long as I can continue to do that, I think that's gonna be good. So, anyways, gives you a little perspective of where I'm at here on the year, and I'll be back at it first thing tomorrow morning. I'd love to finish the week with some trades. I don't like no trade days particularly. This would be my second one. No, actually, this is my fourth of the month. I had one last week on Wednesday, and I had two, the 5th and the 6th. So I've had some no trade days this month. Yeah, it's kind of a bummer, but looks like I have one day here where I was green before commissions, but red after, right there on that day, down $200 or whatever. So yeah, anyways, a couple more no trade days, but I did have a really nice August, a no red August. That was great. Some great momentum then. We had the Chinese IPOs, had a good September. And I sort of thought at that time, as long as I could stay the course, I'd have a good rest of the year. And then things really cooled off quite a bit. So, nothing you can do but just ride the waves of the market, ups and downs. Now, of course, I say that. I don't want to say I'm completely, powerless. I can adapt my strategy. I can try to venture into new areas of the market if I wanted to. I could try to short more aggressively or just try short selling more. I've talked about that quite a bit. For me at this point, because I'm trading in a Roth IRA. So for what it's worth, this is almost entirely in a Roth IRA this year. So I don't have any income tax on this. My taxable gain is I had a couple trades in my main account and that's it. So if someone made this much, shorting, for instance, it would be taxable because you can't short in a tax-free account. So for every 800,000 they make, they might only be keeping about 500,000 of that, 450,000 because of state and federal income taxes, depending on what state they live in. So and then that's, not to mention I made $1 million, but I'm only keeping 800 because of fees and commissions. So if this was all profit to the short side, I would have made $1 million and I'd only be keeping probably about, 450,000 of it. I mean, that's just the way it goes. But it doesn't really incentivize me to think a lot about shorting, because not only do you have the borrowing fees and you have the commissions and you have your ECN fees, right? You've got the locate fees, the ECN fees, the commissions, and then you also have taxes. So it's like I get to keep 40 cents of every dollar I make. Come on. I mean, I get it. Like that's the way it is. But the reason it's a come on is when I have the alternative to trade in a retirement account, which we all do, who are U.S. residents at least. So so that does lock me in a little bit to trading to the long side. But then I can keep 80 cents of every dollar I make after fees and commissions. So I don't know. So that's what I'm doing for right now. Again, at a certain point, 40 cents on a dollar is better than 0 on 0. I mean, if there's nothing, then, keeping 80% of nothing is nothing, but we'll cross that bridge when we get to it. We're not there yet. So anyways, that's it for me. Reminder, as always, my results are not typical. My experiences trading haven't been typical, and there's no guarantee you'll find success whether you trade with me or you'll learn on your own. So manage your risk and practice a simulator before you put real money on the line, and don't try to blindly follow me or anyone else. Take it slow. For those they're going to watch this recap on YouTube, you're welcome to come and check out our holiday sales with the coupon code TRADE2023 to save 40% on your one-time membership fee. All right, so that's it for me. I'll see you guys first thing tomorrow morning.